Good day and welcome to SCO BRICS Insight, where we look at what's really going on in the world of the BRICS. Now, I'm sure most of you have noticed that the price of gold has been reaching new heights in recent months. Many central banks are increasing their gold reserves, plus investors are buying gold for their portfolios against a hedge against inflation, plus other types of financial risks. Now, it's also, some of you might know that Russia is vying with China and who is the largest gold producer, with only around 40 tonnes per annum separating them. And it's expected by the end of 2024 that Russia could end the year as the #1 producer in the world. Now, the situation around mining and precious metals in Russia is actually very different from other parts of the world. I mean, for example, all the gold producers in Russia are Russian companies. Unlike the rest of the world, where the gold mining sector is actually dominated by the multinational mining giants, although the situation in China is actually similar to Russia. Also, the companies in Russia effectively rent the land for a fixed period of time as a deposit under a license from the government, so they don't actually own it, and for that they pay a fixed price for the use of the land and a mineral extraction tax on everything they dig out. It's the same for all extraction companies in other sectors like oil, gas, coal, copper, nickel, etc. Now, recently the Russian government decided on temporarily raising the mineral extraction tax for gold miners. However, in return, they have abolished the export rate duty on gold. In October last year, the Russian government introduced export duties on a wide range of commodities, including gold, whose prices are tied to the dollar exchange rate, and this was done to address concerns about filling the budget. However, in response to a significant decline in gold exports due to sanctions on the Russian gold mining companies, the government, through an executive order, revoked the exchange rate duty on precious metals. In return, Putin signed an amendment to the tax code which increased the mineral extraction tax for gold miners from 78,000 rubles per kilo from the 1st of June to the 31st of December 2024, and that's around $800. So it's not a huge amount. I mean, according to the Deputy Finance Minister Alexei Sazanov, it's a fixed tax that's been introduced to guarantee that a minimum of 15 billion rubles, which is around 180 million, will be collected from the gold miners, and it's not tied to exports. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund my channel and my website, SCOBRICSinsight.com, and help me further develop it. You can do this by making a donation, and that's done by just clicking the thanks button at the bottom of the screen. Everybody who donates does get a personal thank you from me. Now, according to Alexei Kalachev, who's an analyst at the financial group Phenom, the situation regarding the duty and the mineral extraction tax are actually pretty straightforward. The budget requires the additional revenue, and all the exporters were subject to the exchange rate duty. However, the gold miners found themselves then subject to sanctions, so they were unable to export their products to their traditional markets, which included the London Bullion Market Association, which blacklisted all Russian producers. Nevertheless, they started to sell gold domestically at prices close to those of exports, taking into account world gold price and the current ruble exchange rate. Now, to address this tax imbalance, the Russian Ministry of Finance introduced the 78,000 surcharge for gold mining. Now, that was obviously designed to offset the loss of revenue from the export duty, and it just seemed to be more efficient to do that. I mean, otherwise the industry could have been subject to double taxation. So it seems that negotiations between the industry and the government was actually pretty worthwhile. I mean, at the end of the day, the export duty was actually ineffective, and it contributed to actually a reduction in export of gold. I mean, producers then began to sell more domestically, which was confirmed by Dmitry Pukarev, who's an analyst at the broker credit services World of Investments. He said, replacing export duties with an increased extraction tax will allow a budget to actually collect the funds that they want. So introducing the mineral extraction tax and getting rid of the export duty was pretty right thing to do. So that outcome was achieved, and everybody's pretty happy that the money and it's all working out. So anyway, given that the 15 billion in rubles though is a one-off fee, the mineral extraction tax as well as the import duties were a temporary measure. Now, this additional mineral extraction tax will be in effect for 7 months. That's from the 1st of June to the 31st of December 2024. Now, during this period, Russia expects to extract 193 tons of gold. Well, the mineral extraction tax of 78 million rubles per ton will provide the desired 15 billion rubles. So everybody else is happy, and from a financial standpoint, the situation remains pretty much as it was. The gold miners are still transferring the 15 billion rubles to the budget regardless. However, the removal of the export restrictions is actually a positive development according to Danilov. This additional fee of 78,000 per kilo of mined gold is not a significant impediment to gold mine, given the elevated prices for the metal and the continued growth trajectory. Plus, gold miners have some of the lowest production costs in the world, which makes them highly profitable. I mean, on the 20th of May, gold prices reached their historical record high of 2,450 per ounce. I mean, even now, and that's today, I just checked, and it's $2,421. I mean, according to Trading Economics, they attribute the rise in precious metals to the expectations of a reduction in interest rates by the US Federal Reserve System. Now, it's widely believed that the price of gold is directly influenced by the Federal Reserve, and a reduction in interest rates make gold a more attractive investment, particularly as its price keeps rising. Obviously, currency concerns, etc. Anyway, the introduction of the additional coefficient will inevitably impact the profitability of gold mining, but it's important to note that the profitability of Russian gold miners is at a relatively high level, making the tax increase not that important. I mean, in 2023, the Polyus, the leading Russian gold mining company, reported adjusted EBITDA margin of 72%, up from 61% in 2022. Net profit of 44%, up from 36% the previous year. Another company, Selingar, which mines not only gold but also tin, had a loss of 1.5 billion rubles, but that was due to non-cash revaluation of its liabilities, which are denominated in gold and dollars, in the context of rising prices for the precious metal and the exchange rate. I mean, Kalachev says that Selingar is now actively involved in placing bonds denominated in gold, which have proved very popular, and the bonds were actually many times oversubscribed. I mean, the growth of the gold market has an adverse effect on obligations that are denominated in dollars. So if we exclude the impact of exchange rates, the company would generate a profit of 2.8 billion rubles, which is about $28 million, and a net profitability of 5%. So the company's EBITDA profitability remained robust at 38%, although that was partially offset by the resale of third-party gold, which contributed to its revenues. I mean, these are pretty excellent indicators. I mean, one might even characterize as the proposed mineral extraction rate as pretty low. I mean, the current gold rate set by the central bank is 7,000 rubles per gram, or 7 million rubles per kilo. I mean, that is only $7,000, so it's not that much. Anyway, the mineral extraction tax represents only 1.1% of the current gold sales price, so that gives you an indication it's not that high. I mean, according to Pusharev, or World Brokers World of Investments, he's calculated that the mineral extraction tax is only minorly negative, it's not critical. He also expects the profits of the large producers to be up around 20%. I mean, the outlook for gold mining is very difficult with any degree of precision, given the lack of access to official data on production and exports, although I'm pretty much in there. Analysts rely on various estimates, although I have pretty good contacts. I know this personally because I work with Metals Focus, who's one of the world's leading authorities on precious metals, and I provide them with data for their annual gold report. Now, if you look at the historical data, the production of gold in Russia has had a sort of weak correlation with its price in recent years. but I don't expect significant deviations from the volumes produced in Russia. In 2023, they were in the range of 330 to 340 tons of the pure metal, excluding gold in concentrate. Also, domestic gold consumption and exports are each accounting for about half of that volume. I mean, it's widely documented that the primary destinations for Russian gold exports after the introduction of sanctions by the G7 are now the United Arab Emirates, Switzerland, Hong Kong, Turkey and China. In the Russian domestic market, over half of the demand was actually from individuals, and that was largely due to the abolition of the 20% VAT on the purchase of precious metals, and that's led to a surge in the purchase of gold in bullion or coins in 2023, and that reached over 90 tons. This is due to Russians hoarding gold as opposed to dollars, euros or other foreign currency, and that trend has continued into 2024. I mean, Russian gold production in 2024 is expected to be between 344 and 347 tons, and that's approximately 312 to 330 primary and associated metal, the rest coming from recycling and scrap, etc. So the Russian gold sector is in pretty good shape, and the Russian budget's also benefiting. Anyway, thanks for watching. Please like and subscribe, and if you enjoyed this video, please help me fund the channel. Click on the thanks button at the bottom of the screen, and I'll see you all again soon.